The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, on Thursday, we saw the grain trade higher led by soybeans, moderate gains in corn and wheat, hogs rallying on the U.S.-Mexico tariff news, cattle under a little bit of pressure, stocks heavily lower, a lot of volatility once again. Let's put this into perspective. Joining us now for analysis, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, it was good to see you in Denver a few days ago. Now we're back behind video screens again, unfortunately. But, from our conversation just a couple of days ago until after Thursday's trade now, I mean, blink and if you don't like it, the tune will change in a matter of days. I mean, here we are with this Mexico suspension of ag products. If they're under the USMCA, the tariffs for a month, just this fluid news headline situation driving the markets and for the most part to the upside in the ags on Thursday, Brian.
You betcha. A lot of dynamics, a lot of wheels in motion here. And as we look at big picture, say a positive step forward for maybe continued relationship repairing, let's call it, with Mexico, not with Canada apparently, but with Mexico. And so the market liked that. I think the other thing you've got too in the grains is you've got a forecast for southern Brazil that looks kind of warm and kind of dry. And so on the one hand, that allows for bean harvest to rapidly move along, but not all the beans are mature, so rain would be welcomed. Argentina looks to be actually, believe it or not, a little wet for soybean harvest, so slow harvest there. And I think the dry, though, has to have probably the biggest impact on corn because you're talking about planting corn seed now into dry ground or waiting to plant corn seed. I'm not sure how they would work that in Brazil. But quickly, that window for the second crop safrinha, the ideal window, was closing. Typically, it's about the first week of March here. So that's there's a lot of wheels in motion there. Some big short covering today early on, some good strength. Opposite of Tuesday. Tuesday, when we were talking there at the Commodity Classic, we saw twice double-digit losses on corn, and it recovered to finish 4 lower on Tuesday. Yesterday, 4 higher. Today, at times, double-digit gains, kind of sagged into the close, Jesse. But solid gains nonetheless, and a little bit more breathing room for the market to consolidate or try and find its next direction.
I would have to think that it's going to be a matter of how we close the week. What is that weekly close in these markets amid all the volatility? Can we, string a couple days in a row together of some gains in the grains to try and get us at least back to where we started the week or within striking distance of that, I would say. I mean, talk about that. Is it going to be a matter of how we close up the week to really get a feel of this market?
Yeah, that's a great observation because it seems like, or feels like today was an up day, but it just seems like things have just been battered to no end this week. And actually, May corn is only down 5.5 cents on the week. Now, last week was a challenge. That was a tough week. The May, and I use May corn because that's your front month corn contract right now. But on the weekly chart, May corn was down 35 cents last week. So that's really the story was the week before where things were pretty tough. Week before that, we were into contract highs, but posted a weekly loss of 3 3/4 by the end of the week. So that was what we call a hook reversal, maybe another one of those signals at the top that really, with hindsight, looked kind of large. But yeah, consolidation across the board. Wheat prices recovered some today. Everything is still under bigger picture pressure. But I sure like the way things traded most of the sessions today. Just maybe, a little disappointing that both corn and wheat sagged a little more. Beans, solid gains, double-digit gains, 15 plus cents on the front months.
Can't forget about export sales. It looked like the weekly sales for corn were near the high end of guesses. The soybean sales, I'd say, were unremarkable. We got a flash sale of soybean oil, the unknown, too. So, I mean, you look at that side of the equation, maybe at least, if anything, there was some supportive items when it came to export sales on Thursday.
Yeah, just under 36 million bushels for the corn, excuse me. And you're right on beans, uneventful at 13 million, but still a sale, a couple sales. Soybean oil, 2 flash sales this week. Pretty impressive. So you got to wonder if there isn't just value buying after the sell-off where end users just come in and say, regardless of the tariff, we talked about that when we were down in
Mhm.
Kansas City, that, geez, you had the market down, corn market down about 15%, 25% tariff, but the dollar down about 5% from its highs. It's kind of a mute point. So now if you don't enact the tariff, corn's on sale for Mexico. Get it bought.
Mhm. That's a good point that the end user stepping into this market here to, and maybe with end users stepping in, that in itself could add a little bit of support to some of these grain markets potentially. I don't know, Brian. I mean, your thoughts on that if their end users are stepping in, starting to buy the break, so to speak.
Well, exports year to date have been running generally better than expected. So a lot of that may have been talk of concern of tariffs and things. Well,
Mhm.
now the tariffs off for a month at least. So again, went on sale, and it's on sale for domestic users too. Big pushback in the board price here. When we were in the classic or at the classic there and talking to producers. A lot of them were disappointed in the market, but they kind of said, well, but I made a lot of sales here lately. So it didn't seem that it bothered them too much. And really, I mean, if you look at both sides of the coin, the end user who may have been sort of complacent and comfortable with this idea of big supplies and all of a sudden dealing with several favorable USDA reports and drops in yield, kind of felt like they might have missed an opportunity to get some things bought. Jeepers, you go to new crop corn, just think about the cost of production, inflation, and all those things. December corn futures trading around 450 or under 450 this week. My goodness, that is a really, really good price that you have to pause and think about. Now, I'll be the first to tell you that corn might be under $4 if we add 3 million acres or 4 million and have high end yield. Well, those are a lot of what if stories as well. What if it is dry? What if this 89-year cycle that some of the more prominent weather people have been keeping an eye on does really come into full force this year and we don't get a timely rain? The risk is to the end user to buy cheap and buy a lot.
Very true. Very true. How about in that livestock sector? Hogs, I think, had to have rallied on that favorable Mexico news on Thursday. Brian, your thoughts there?
I think they sure did. Cattle sagged a little bit. Well, they traded both sides steady into the close a little bit there, but really nice couple dollar gain in the hog futures, considered overbought. Pretty hard sell off. They really, if all the markets, it almost seemed like hogs or pork took it kind of on the chin the most, anticipating that tariffs were going to come into play. That market really got hammered kind of hard, but nice to see the comeback here. Look at June hogs, $97. Now that's not 106, but so far in the week, a really nice what we call hook reversal, and June hogs down to 92 at one point, now at 97. That's a $5 swing already this week. So good to see. And on the weekly charts, above all of the critical moving averages that I think have some merit here, and those are the 40 and 50 week moving averages. Back above those, back above the weekly Bollinger Band. So some really good technical things there on the June hogs, July hogs, also picking up a couple dollars here. So really like that big picture perspective. And if I convert those into daily charts, I think you've got some things that are starting to happen there too. Good close today. What I'd like to see, if you're a follower of moving averages, I'd like to see that June contract push through the 10-day moving average. That has been acting as resistance on daily charts since the market broke under that on the 19th of February. So we
Mhm.
need to get a little more strength under the market. I don't see why we shouldn't. The market's been oversold. We're getting crossover buy signals and stochastics, and the money's coming, or at least traders are coming back into the long side.
Brian, as we get close to wrap it up here today, I should ask the dairy markets, how have they been handling all of the tariff volatility and more? What's your thoughts of the dairy trade right now?
Yeah, so they haven't been handling it well. So new contract lows generally across the board on most futures contracts. Cheese market has been the one that's been, considered heavy on supplies, but butter too continues to slide into new lows. Now today we saw a little bit of gains in the blocks. The spot barrel price of a penny and a quarter. It's something. But I got to tell you, with barrels and blocks both under seven. Both have a 16 in front of them, or $1.60 or 16 per hundredweight. Unfortunately, the board price in the dairy contract still overvalued. And, boards in the 17 and 18. Now, 17.21 on the April contract is a little bit more in line with where that cash cheese market is. But boy, that market has plunged, and even today, not a lot of help. Unlike hogs, or we saw some of these other markets, corn really start to put some steam on. Hogs on a milk on a daily basis here. Last trade down 13 on April, and that puts April at 17.10. But jeepers, you go back to January 30th, they were at 20.02. So think about that, $3, right? That's a 15% loss in value. That's about as much value as the corn market had lost by early in the week. And so probably getting close to a low, but no sign of it yet.
Brian, any final thoughts for folks you would mention or reiterate as we close out the show today?
Well, welcome to volatility again. Volatility creates opportunities. So just you don't get too discouraged with, trying to outguess it, and politics and all of that. Control what you can control. And we just took a look at the milk market there, and this tariff talk isn't new talk. And so, looking at a market like that, you'd had opportunity to control or shift the risk in that market. So be prepared to do so. And just stay on top of things. This volatility, like I said, it's tough, but it also creates opportunity, and take advantage of that. I think the opportunity now is to the end user or buyer of grains, corn, wheat, whatever it is. It got punched out pretty hard. It's on sale. Get it bought.
Brian, if folks want to reach out to you there at Total Farm Marketing for a conversation, what's the best way to reach you?
Use our 800 number. And call into the office and ask for Brian with a Y, Brian Doherty, 800-334-9779, or shoot me an email, Brian with a Y at totalfarmmarketing.com. So it's BRYAN. Don't spell the word Brian with a Y. BRYAN at totalfarmmarketing.com. There's two ways to spell Brian. The correct way is with a Y. And then the last thing you do is check out our website. totalfarmmarketing.com. We've got a lot of great resources there. A couple of booklets if people are interested. One's called Inventory Management. One is called 12 Option Strategies for an Uncertain World. Really good learning tools. They're free to the public. Take advantage.
Brian Doherty, Senior Market Advisor at Total Farm Marketing. Always a pleasure, my friend. Thanks for joining us on Market Talk. Have a great weekend. We'll talk to you next week.
Awesome. Thank you, Jesse. And I just saw a flash. It looks like U.S. will pause tariffs on Canada. Don't know more details than that, but I just wanted to sneak that in there. That's somebody passed that on to my team. I can't verify it, but that's what it looks like.
Well, we'll dive into that and we'll take a look, and we'll definitely be following up on that here the next few days. Thanks for the tip. And Brian, have a great weekend. We appreciate it.
Awesome, Jesse. Great to work with you, and thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.